Warriors of price action and guardians of fundamentals, welcome to Retail Recon. On today's episode of Recon Reports, I will debrief the trade on AXON, so gear up and let's go to work. First, let's start with SITREP. On the chart, we can see AXON experienced heavy losses. It dropped by around 20% in a single day, but it also regained a lot of it back. A drop of that magnitude is usually a sign to run for the hills. What goes down tends to go down even more. Remember the old saying, trend is your friend. Downward trend is usually a sign to short the stock and not to go long. Further supporting the decision not to engage is the price being below two of the moving averages I usually track, 22 and 150 exponential moving average or EMA. Following the default rules of engagement, I would never enter the trade. But in this case, there was a slight chance for a reversal, a short move in the opposite direction. What supported my decision was the quick regain of the territory after the drop, and MACD has crossed the signal line, although still being negative, which is generally not a good thing. But in this case, MACD crosses for AXON have proved to be successful regardless of if they were above or below zero. If you are unfamiliar with these terms, don't worry, I will explain what they mean in the future episodes. Based on all, there was a small chance the trade might work. I decided to go after it and to use a very narrow stop at 1.5 ATR. Let's walk through the trade as it unfolded. My entry point was at 5.44 and I bought one share and established a long position. Why such a small position? Rules based, designed around my use and lose rule, which was presented in episode 4. Remember, the goal is to stay in the fight as long as possible. Also, considering there was a strong downward trend, I didn't want to employ too much capital as the trend was moving against. After opening the position, I got lucky. Price movement started working in my favor and an upward trend started forming, and it lasted until the 22-day moving average was reached. There, it started bouncing up and down a bit until it stabilized around 5.41. At that point, I decided I will exit the trade on the next upward move. I waited until the price crossed the moving average and then I placed a sell limit order around 5.80. The order got executed at 5.81, which concluded this trade. To summarize the trade, the total capital employed was $544 or 11% of the account value. Max risk was $27 or 0.6% of the account value. And I closed the trade with $36 of profit or 6.6% of the employed capital. Overall holding period for this trade was 23 days. Some of the key takeaways. I didn't have a strong conviction on the trade, so I placed a very narrow stop. Big gap and strong recovery in combination with MACD were used as primary signals to enter the trade. And finally, moving average was the breaking point for me to exit the trade. And with that, we conclude this episode. If you found value in this mission, lock in your support by liking, subscribing, and following our movement. Be sure to join the next episode where I'll take you to the Options Bootcamp. Thanks for standing watch with me today, and until next time, trade smart, risk sharp, and stay on top.